Sanjay, appreciate you joining us here on CNBC TV 18. It's a day that we would like to forget for more than one reasons. Of course, it's been disaster on the cricket pitch as well as our markets are concerned. But what do you make of the kind of sell-off that we've seen, Sanjay? A 600-point drop that we saw on the Sensex, coming back down to levels that we last saw on the 14th of January. What do you believe has led to this kind of meltdown?
I think it's a combination of many factors, but primarily an overbought situation that we've had for quite some time. Like I've been saying for many weeks, that the prices had run much ahead of fundamentals. We were building in too many positives coming into the budget. We're building too many positives into the RBI action that happened immediately post the budget, and thereafter there really wasn't much of news flow expected. So you couldn't have the market just purely running on momentum or cash as liquidity kept coming in from overseas. And then added to that, obviously, has been the global emerging market cool off, the sell-off that we've seen. Today, if you look at it, it's been a function of end of account selling, the overseas market action because of the crisis that we're going through, the geopolitical issues. So combination of things, we saw the sell-off today, but I'm not too surprised. I was quite expecting it really.
That's right, Sanjay. The last conversation that you and I had, you did have a cautious outlook as far as the markets are concerned. But do you see the markets correcting much further from these levels? Because we've already come off quite sharply, not just today, but for this entire series.
That's right, Sid. I think we are at the lower end of the range. So I think probably it would be a good time to start looking at options to buy, looking at things to buy. I'm not saying that we'll have a V-shaped rebound. I doubt that. But at least I think the major part of the sell-off is done with. We'll probably consolidate at these levels. Now we'll wait for the quarterly numbers that are going to start flowing in the next week, 10 days. So if the numbers are as per expectations or below expectations, we'll react to that.
Sanjay? Do you expect earnings growth to give us any sort of triggers on the upside?
No, I don't think so. That's the reason I'm saying that in the next few days I don't expect a substantial recovery in the market. I still see a tad more selling to come in there, and that should be bought into because I don't see the markets going down another 200 points. But I don't see much earnings surprises either coming in because whatever I did talk to the corporate sector today, things haven't really changed dramatically as the sentiment was showing them to be.
So you said that you would use these dips as buying opportunities, Sanjay. What would you get into at this point in time? What looks good to you, both from a fundamental point of view as well as a valuation story point of view?
I think inward-looking sectors, primarily because I have an issue with the rupee, which I've always been saying that rupee will become weaker because we've seen emerging market currencies being impacted. So I would look at companies who are primarily demand is going to be driven by domestic demand, this capital goods, infrastructure. I think banks have corrected substantially. They also look good. Some consumer good companies who corrected substantially, particularly in the FMCG space. So I think these are the kind of areas I would like to be invested in, but I don't see a sudden rebound in them. I repeat, I would like to be invested in. I wouldn't want trading positions in them. So which means that there would be good levels to start buying in slowly now.
All right, Sanjay, always a pleasure speaking with you. Thanks very much for joining us. That's Sanjay Dutt of Quantum Securities with his take on the market.